Big Blue paints a rosy profit picture after the bell with one of its strongest earnings reports in years. But IBM investors sell off the stock anyway, and after hours trading, we'll tell you why.
Fed Chairman Ben Bernanke had a stern warning for senators today. He says retiring baby boomers may break the bank if action isn't taken now on entitlement spending.
Continental Airlines says it's en route to sustain profitability. We'll get a check on just how the airline industry is doing when we talk with airline analyst Ray Neidl of Callion Securities.
And taking the virtual meeting to a whole new level. Tonight's Tech Talk previews a new video conferencing system with high-definition video and surround sound. It's just like being there.
I'm Paul Kangas.
And I'm Susie Garup. This is Nightly Business Report for Thursday, January 18th.
Nightly Business Report is made possible by
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective.
And by A.G. Edwards.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. A tech sell-off on Wall Street today. The Nasdaq tumbled 36 points, or 1.5%, led by a big drop in shares of Apple. And the selling continued after the bell. Shares of IBM fell almost $6, or nearly 6%, even though Big Blue reported solid quarterly earnings and revenues. Excluding charges, IBM earned $2.26 a share in its fourth quarter, 7 cents more than analysts' estimates, and a 12% increase over last year. Revenues jumped 7% to $26.3 billion, also stronger than Wall Street forecasts. The company benefited from several software acquisitions and big services contracts. CEO Sam Palmisano said IBM is, quote, well positioned in the growth areas of a changing IT industry, end quote. But while software was solid, IBM's hardware sales were sluggish, and that raised concerns that sparked the after-hours sell-off in the stock.
Oil prices continue their slide today, briefly dipping below the $50 a barrel mark to an intraday low of $49.90. That slide came on a new report showing a buildup in oil and gasoline inventories around the country. The U.S. Energy Information Administration said crude oil supplies rose by nearly 7 million barrels last week, while gasoline stockpiles grew by 3.5 million barrels. Crude for February delivery went on to settle at $50.48 a barrel. That was down $1.76. Some OPEC member states have called for more cuts in oil production, but Saudi Arabia, a key OPEC member, has so far refused to go along.
Well, even though oil prices are coming down, consumer prices are on the rise. The Labor Department said today that its consumer price index rose 0.5% in December. The big question now is whether the inflation report changes the outlook for interest rates. Erica Miller reports.
Today's inflation data has many economists even more confident the Federal Reserve won't cut interest rates soon. The Consumer Price Index, which measures inflation at the retail level, rose 0.5% in December. That's the biggest gain since April. The core rate, which excludes volatile food and energy costs, rose 0.2% after a flat reading in November. The data shows core consumer prices rose 2.6% in 2006. That's well above the Fed's comfort zone, which S&P economist David Weiss says is about 2%.
Obviously, there's concern. The Fed is very worried that the inflation rate's going in the wrong direction. And we're seeing some upward pressure on wages, which has them worried. So they're going to be looking very closely to see what happens to the labor market, to wages, and what the impact of that is on these core inflation rates.
Nearly every category in the December survey posted an increase, but energy was by far the biggest gainer, up 4.5%. Some economists say the latest data is another sign that inflation is not easing as quickly as the Federal Reserve would like. Nearly everyone on Wall Street expects the Fed to hold short-term interest rates steady at its next meeting January 30th. But some Fed watchers think the central bank could raise rates 0.25 percentage point at the following meeting in March to ensure inflation remains subdued. Others, like economist Joe Lavorgna of Deutsche Bank, think the Fed's next move will be a rate cut, perhaps as soon as May.
We believe if the economy retains its current momentum, inflation's likely to stay where it is, if not drift lower, and the Fed will not have to raise rates in response to inflation.
The good news for investors and consumers is that many economists think inflation pressures will retreat in the months ahead. They predict that falling oil prices will lead to lower costs for many other goods and services. Erica Miller, Nightly Business Report, New York.
An opening rally attempt by Wall Street's blue chips was undermined by that inflation news, which dashed hopes for lower interest rates. Negative sentiment gained ground on word of an unexpected surge in new housing starts and another drop in weekly jobless claims. 90 minutes into trading, the Dow was off 11 points, but the tech-laden NASDAQ was off 25 points. The sharp sell-off in tech stocks was a drag on the blue chips this afternoon, but tumbling oil prices prevented steep losses there. So the Dow Industrial Average closed off only 9.22 at 12,567.93. But the NASDAQ lost a hefty 36.21, ending at 2443.21. Standard & Poor's 500 index fell 4 1/4 points to 1426.37. In the bond market, the 10-year note gained in 9/32 to 99 1/32, putting the yield at 4.75%. Federal Reserve Chairman Ben Bernanke raised a yellow caution flag on Capitol Hill today at a Senate hearing on the long-term outlook for the federal budget. Bernanke is worried that entitlement spending could get out of control if something isn't done sooner rather than later. Washington Bureau Chief Darren Gersh reports.
Ben Bernanke is not the first Fed chairman to warn the government's spending habits could damage the economy in the long run, but he may be the most blunt about it, calling recent reductions in the deficit the calm before the storm. The Fed chairman warned interest payments on the national debt could triple as deficits rise to pay for entitlement programs supporting baby boomers in their retirement.
If early and meaningful action is not taken, the U.S. economy could be seriously weakened, with future generations bearing much of the cost.
We can't grow our way out of the problem, Bernanke said, because Social Security and Medicare spending increases with the size of the economy. Without reform, Bernanke warned the nation may find itself in a vicious cycle of rising deficits, higher interest payments, and skyrocketing debt. Given the risks, New Hampshire Senator Judd Gregg asked why the bond market doesn't seem to be reacting.
If I was buying long-term debt 10, 15, 20, 30 years out, I would sure want a much higher interest rate than what appears to be what the markets are demanding today. What are they assuming we're going to do that I'm not aware of?
Alan Greenspan called that question the bond market conundrum. So why are long-term interest rates now about the same as those on a 5-year bond?
Either this is a trading phenomenon and the holders of the bonds are not really thinking about years in the future, but the other possibility, which is that one way or another, the bond holders do expect that Congress will take whatever measures will needed to ensure that the bonds are paid off and that it's done in a context of price stability.
For his part, Bernanke says the Federal Reserve would not allow the government to inflate its way out of this problem by printing money, though he is unlikely to be Fed chairman 15 or 20 years from now when the big bills come due for the baby boomer retirement. Darren Gersh, Nightly Business Report, Washington.
More signs today of the turnaround in the airline sector. Quarterly results from Continental Airlines show that the carrier is flying back towards the black and trimming its losses. Excluding charges for a payment to its pilots' pension plan, Continental lost just 4 cents a share in the fourth quarter. That was a much smaller loss than analysts were expecting. Sales at the airline rose 11% to $3.2 billion, right in line with analysts' estimates. Looking ahead, Continental says the airline is positioned for sustained profitability, with costs rising just 3% in the current quarter. Joining us now with more analysis of the outlook for airlines, Ray Neidl, airline analyst with Callion Securities. Hi, Ray.
Hi.
Well, you know, we've seen better than expected earnings from airlines, not only Continental today, but also American Airlines yesterday, as well as Southwest Airlines. What's going on that the airlines are doing so well these days?
Well, the fourth quarter is the slow quarter for the airlines, and results are marginal. In fact, for me, they're a little disappointing because of winter storms in December. What we're looking at, though, is going into 2007, where we're expecting strong results. The cost cutting that the airlines have done, capacity constraints, and price increases should lead to good profitability for the industry for this year.
And jet fuel prices are coming down, and that's got to help. Do you see that continuing throughout 2007?
Well, in my projections, I'm assuming high fuel prices, around $60 a barrel. So any discount we get in jet fuel prices will just be a bonus to the earnings that the airlines can achieve this year.
Ray, you have a couple of stocks that you've put on your buy list, including AMR, American Airlines, Continental, UAL, the parent of United, U.S. Airways, and Alaska Air. Tell us why you like these stocks.
Well, I think the legacy carriers have more upside potential in a good market. They've got more of an ability to raise prices. They've got more yield buckets to play with to get their yields up. And they've been doing a good job in cutting their costs. The low-cost carriers are already low cost. They don't have as many yield buckets to get their prices up.
Now, looking at these stocks today, Continental was down, AMR was up sharply, so was UAL. Why were the stocks down today, and is this a good buying opportunity now?
It is. They've had a good run earlier this week and last week. They were up for a while today. I think they went down with the whole market. Oil prices were down, but when the market went down late in the day, a lot of the airlines went down as well.
Ray, do you have any disclosures to make on these stock recommendations you're making?
No, I don't participate in airline stocks because of the complications.
Okay. Tell us a little bit about your outlook for Delta. You know that U.S. Airways has a bid, a takeover offer for Delta. Do you think that deal is going to go through?
I'm more conservative on this. I rate it no better than 50-50. I think the deal is a good deal for the creditors at Delta. I'm not sure if the regulators are ready to approve that. Also, there is overlap in those two systems. It's not a real end-on-end merger, and the regulators may take a hard look at that.
How do you think Delta will do as a standalone carrier in this competitive environment?
In an up market, they'll do okay. But down the road, we've got too many airlines with too many hubs, and we're going to have consolidation either through mergers or in the next economic downturn, some airlines will disappear through liquidation.
You said in a recent report that out of the 6 legacy airlines, you expect only 3 to remain, mostly because of consolidations. What are possible combinations that you think that federal regulators will let go through?
Well, it could be any number of combinations. I think the federal regulators would look a little bit more favorably on end-to-end, in other words, where there's not a lot of overlap. And I'm not predicting these mergers, but American and Northwest would be a good fit. United and Continental would be a good fit, and Delta would be a good fit with either United or Northwest.
All right. Thank you very much. Really appreciate you coming on the program.
Okay.
We've been speaking with Ray Neidl, airline analyst with Callion Securities. It looks like the felony charges now pending against former Hewlett-Packard chairwoman Patricia Dunn could be dropped. Dunn and 4 other defendants stand charged in connection with Hewlett-Packard's boardroom spying scandal. Now, a lawyer for one of those defendants says California prosecutors have offered to drop the felony charges if his client pleads guilty to a misdemeanor. That lawyer says the same deal was offered to Dunn and the others. We asked the state's attorney general about it, Paul, but a spokesman told us that he had no comment because they don't discuss plea negotiations publicly.
Well, that scandal broke last fall, as you know, Susie, when HP said its investigation obtained the private phone records of journalists and others. Now let's look at our stocks in the news tonight. New York Exchange volume leader on nearly 25 million shares, Ford Motor moving up 14 cents, followed by Motorola with a 24-cent gain. Motorola due to report quarterly results tomorrow. General Electric moved up 2 cents. Reportedly, the company plans to acquire most of Abbott Laboratories' diagnostic business for about $8 billion, and after the market closed, GE did confirm that. Pfizer, 28-cent gain. Sprint Nextel moved up 21 cents, 5th in big board volume. Time Warner, 15-cent gain there, but ExxonMobil down a $0.50 on the sharp drop in oil. EMC, 29-cent loss there. AT&T up 53 cents. Texas Instruments and a very weak semiconductor group down 81 cents, 10th in volume. Abbott Laboratories moved up $1.24, positive reaction that it's going to sell most of its diagnostic business to GE for some $8 billion. And then Bar Pharmaceuticals gaining $1.98. Company received tentative approval from the FDA for its generic version of Roche's Kytril nausea treatment. Then formerly SLM Corp used to be called Sallie Mae, down $2.53. Fourth quarter earnings just a touch higher than last year, 74 cents versus 73, but that was a penny below the street estimate, and the Friedman Billings brokerage downgraded it to just a market perform rating. Merrill Lynch down $1.41 despite a lot of good news today. Fourth quarter earnings jumped 68% over last year to $2.41 versus $1.41, and that was 49 cents above the street consensus. Merrill's also boosting its quarterly dividend 40% from 25 cents to 35 cents a share. Oxford Industries up $2.50. The SunTrust Robinson Humphrey brokerage upgraded it from neutral to buy. And then Harley-Davidson down $1.89 despite higher fourth quarter earnings, 97 cents versus 84 last year, and a penny above the street estimate. Jones Apparel Group did well, up $1.23. There is speculation the company may be planning to break up. Khaki International down $7.88. The company cut its second quarter and 2007 earnings outlook on slower demand for its services from the Department of Defense. And then another IT company, SRA International, down $2.17. It was downgraded by J.P. Morgan from overweight to neutral. PPG Industries losing $1.82 despite fourth quarter earnings higher, 94 cents versus 68 last year, but that was 8 cents below the street estimate. J.C. Penney, however, hitting a 52-week high with that gain of $3.97. J.P. Morgan upgraded it from neutral to overweight on the strong earnings outlook for J.C. Penney. Apple Computer topped the active list, down $5.88 on the company's rather guarded outlook, as stated yesterday. Google in the weak high-tech sector down $9.45. Cisco 53-cent loss. Intel 39-cent drop there, and Microsoft was down a dime. That was fifth in volume. Research in Motion losing over $6. Oracle 40-cent drop. Applied Materials off $1.15. That's down on Lam Research's profit warning. That whole semiconductor sector was weak on that, and Lam Research itself down nearly $8. NVIDIA, yet another weak semiconductor, down $2.86 a share. But look at this gainer, Hoku Scientific. Hoku means star in Hawaiian, I'm told, and it was a star of the day with that gain, 122.5%. On news, the company received a 7-year, $370 million contract to supply Sanyo Electric with polysilicone. What a move. Those are the stocks in the news tonight. Susie?
And you learn a little Hawaiian along the way.
Yeah.
There's a move afoot in Congress to cut tax breaks and deductions for big oil companies and end sweetheart deals on oil leases. The House passed the energy bill today, capping the last of the Democrats' 100 hours agenda. But as Stephanie Du reports, the controversial bill faces an uncertain future in the Senate.
The message to big oil from Democrats: times have changed. The bill repeals tax breaks for oil and gas exploration, rescinds tax deductions for domestic oil and gas manufacturing, and rewrites oil drilling royalty leases. Texas Democrat Lloyd Doggett said the bill signals the end of special treatment for big oil.
They prospected in Washington, and they never came up with a dry hole. It was one gusher of tax benefits and special privileges after another. Now we finally have an opportunity to rewrite a genuine energy policy.
The bill would generate $14 billion in taxes and royalty fees over the next 10 years. That money would go to fund alternative energy initiatives, but it shines little light on just how the money will be spent. Republicans blasted the legislation as a political ploy for sound bites at the expense of sound energy policy. They argue the proposal will drive oil and gas prices higher. New York Congressman Phil English called the bill a placebo.
That will ultimately reduce domestic energy production, give American energy companies less of a reason to invest in exploration here at home, encourage greater dependence on foreign oil, and damage America's manufacturing base.
The House bill won't be taken up directly by the Senate. Senate Majority Leader Harry Reid says the Senate will approach energy and global warming issues together with a series of proposals, among them rescinding oil industry tax breaks.
I think we want to do it for a number of reasons, not the least of which we're going to pay for everything. We're not going to do deficit spending, as has been done the past 6 years. And this is a pot of money that certainly we should have.
House Speaker Nancy Pelosi called today's bill an important first step, and she also announced the creation of a select committee to work on gaining energy independence and stopping global warming within 10 years. Stephanie Du, Nightly Business Report, Washington.
Tomorrow, our Friday Market Monitor guest is Robert Drock, publisher of the Drock Weekly Research Report.
Here's a look at what's happening tomorrow. The University of Michigan issues its first look at January consumer sentiment. Also tomorrow, earnings from Motorola and Dow Components, Citigroup, and General Electric.
Recapping today's market action, red ink all the way around. The Dow fell 9 points and the Nasdaq Composite lost 36 points. To learn more about the stories in tonight's broadcast, go to Nightly Business Report on PBS.org, or you can also email us at nbr@pbs.org.
In tonight's Tech Talk segment, ringing up sales, ramping up your fashion sense when it comes to your cell phone, and reaching out to others at your next big business meeting. With an explanation of what all that entails, here's our technology maven, Scott Gervey.
The numbers on personal computer sales are in, and they are not good for Dell. Hewlett-Packard expanded its lead over Dell in the fourth quarter with 17.4% of global PC shipments. China's Lenovo was third. South Korea's LG Electronics said today it will ship a cell phone co-branded with the Italian fashion house Prada next month. The phone is buttonless and has a touchscreen, and if that sounds familiar, it does resemble the Apple iPhone, announced with great fanfare last week. iPhone ships in June. The LG Prada phone was actually announced in December. Apple has some trouble claiming a first for the iPhone brand as well. iPhone was trademarked years ago by a company now part of Cisco Systems. Cisco is not commenting on its trademark dispute with Apple, but is eager to show off its wonderful telepresence meeting system. It's hard to do justice to this on conventional television, but Cisco's telepresence is to other teleconferencing systems what a Mercedes is to a Model T. Telepresence works as an integral part of an enterprise's video and data network system. And with high-definition video and surround sound, these specially designed rooms display life-sized images and real-time audio.
After about 10 minutes, people just settle into the fact you're in a meeting at an oval table. The fact that, the distance between the two halves of the table is significant is irrelevant. And you'd be amazed. People get into arguments across the table. They actually get into really discussions as if literally there was only a piece of glass between us instead of
or even humor crosses the technology, right. Which it, with old video conferencing technology, it really did.
Amortized over 3 years, a telepresence room costs $10,000 to $12,000 per month. Not much compared to real travel expenses, even without considering the value of time lost to travel.
Bringing multiple cities together around a virtual table to have one meeting is another capability that we will enable. And of course, that's not really something you can do with travel, right? This takes it one step beyond being able to get on a plane and go somewhere, because you can only be in one place at one time.
Cisco made its telepresence rooms available to employees during the holidays so they could visit with family members at other Cisco sites around the world. Scott Gervey, Nightly Business Report, New York.
And that's Nightly Business Report for Thursday, January 18th. I'm Susie Garib. Good night, everyone. Good night to you, Paul.
Good night, Susie. I'm Paul Kangas, wishing all of you the best of goodbyes.
Nightly Business Report is made possible by
Is your nest egg in shape for retirement? Objective financial advice can help. A.G. Edwards, for more than 118 years, fully invested in our clients.
Franklin Templeton Investments. After 50 years of worldwide investing, we see market opportunities through the eyes of experience. Franklin Templeton Investments. Gain from our perspective.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Missing your favorite OPB programs? Log on to opb.org/on-demand to learn how to schedule OPB television on your time.
For more information about investing, you may order Nightly Business Report's home video, The NBR Guide to Buying Bonds. This program is available in either the VHS or DVD format.